So today I want to talk to you about money moves. Yes, money moves. Totally stole that from Cardi B. Couldn't resist. The Fed raised rates last week, as we all know. And as a saver, that's fantastic. But in the mortgage industry, everyone's like, oh, really? Okay. So if you are home shopping, I'm going to tell you right now, if you're on the fence, get off the fence, because the Fed is saying they're going to do it again in December. And I don't think they're playing. They don't seem to be playing at all. Everything they're saying they're going to do, they've been doing. So you're going to want to look pretty aggressively right now. There's some great deals in the market because the market slowed down a little bit recently. And if you wait until next year, guess what? It's just a higher rate. So I would urge you, if you're on the fence, to start shopping aggressively now, okay? Because if you're like, oh, I think the housing market is going to go down a little bit. If it goes down a little bit, that rate increase is totally going to wipe it out. So praying for that isn't going to necessarily work. And if it doesn't go down, you're just going to hold out and end up with a higher rate. Okay? We saw a lot of this on last year versus this year. So you really want to be aware of that the Fed is not playing. Okay, the other thing is that if you already own a house, now is the time to make sure that you're positioned for your future. So if you got in, let's say 5 years ago on a 7-year ARM, okay, and the rate was amazing, it's great, but you want to keep that house for the rest of your life, you really want to consider moving into a fixed rate. Okay, and the reason is that rates are going to continue to go up. And when your ARM adjusts, it may be okay for a while, but ultimately it's not going to be. So you need to think long-term planning, okay? And reach out to your trusted mortgage advisor. If your trusted mortgage advisor, they'll give you options. It doesn't mean you have to refinance. And if someone's pushing you really hard to refinance and the numbers aren't lining up, walk away, okay? Here's an example of that. So you'll see in social media, on the news, everywhere, there's always some sort of company that's like, Obama wants you to get a 15-year fixed rate note. And you're like, gosh, I don't remember him saying that, but okay. It's always twisted. There's always some politician that they're saying wants you to get a 15-year note. And it can make a lot of sense to do a 15-year mortgage. It can be a fantastic product for the right situation. However, if you're in a 30-year mortgage right now at 3.375% interest with no mortgage insurance, moving into anything is a terrible idea because you already made it. So if you're in a situation where you're at 3.375 with no mortgage insurance and anyone's encouraging you to refinance, I would be a little bit afraid, okay? The only time it might make sense is if you have a lot of debt. Now, that's the other thing that these rate increases affect. They affect how much you pay on your debt, student loans, credit cards, all of that stuff's going to be going up. So when you're looking at your full picture, beyond just the house, you need to look at where you are on that debt level, okay? Because if you have $100,000 worth of debt at 20%, and your mortgage is $100,000 at 3.375%, it's still going to make more sense to do a refinance into a higher rate to pay off that $100,000 at 20%. Okay? So you want to look at all these options. Right now, it was like a wake-up call for everyone to see what they have and get positioned for the future. It's like going into winter. So please take a look at everything. If you have questions, always call me. But now is the time to start thinking about what you're doing with your mortgage. Thanks for watching.